Hi, everyone. Today I'm joined by Jason Berwanger, the CEO and co-founder of Hubify. Hubify is a cutting-edge financial automation platform built specifically for e-commerce operators. Jason has been on the forefront of solving one of the most persistent challenges in the e-commerce space, making revenue recognition seamless, accurate, and audit-ready. Jason, great to have you today. Super excited to talk to you about Hubify. And the impact on the industry. Jason, what inspired the creation of Hubify? And what gap in the market are you trying to fill?
Lonnie, thanks for having me. I started on the corporate accounting side, held pretty much any role from accounting analyst to revenue accountant, up to the point where I was the founding finance head of for a number of like insured techs and fintechs. And then ultimately through those experiences kind of determined there was a pretty big underserved part of the market where particularly for a lot of these high volume and e-commerce type of folks, the ERP used to contain everything, had all the orders and returns and all the financial reporting and taxes, and everything went through all the way to like Cash App. And I think you know this, I know this. When you talk to folks, it's like, yeah, their data's all over the place. They oftentimes have like a CRM or an order system. They have potentially a separate billing system. They may take payments from, Stripe and Braintree and PayPal and Adyen and all kinds of fun places. That leaves finance and accounting in a world of hurt sometimes, because that is a lot of data to kind of translate operationally into this never changing, super trustworthy and compliant revenue to cash reportings. I cut my teeth for a company back in 2020 called Root Insurance. They were high volume insure tech. They sold personal lines auto insurance and, had very similar problems. We had NetSuite as kind of our ERP, but all of the data was decentralized. And I was frustrated with the lack of technology to support us. And we had to build a lot of tech internally to kind of get ready for the IPO. And it was really me and the accounting team stuck in between these vast sums of ever-changing data and getting a trustworthy ledger. So it was frustrating enough to say, hey, there's definitely an opportunity in the market where folks want all this financial reporting and compliance and this continuous close that's oh so elusive for the accounting folks. So we created Hubify to fit that need.
Yeah, we see a lot of technology, a lot of data issues when it comes to our e-commerce clients, and you'd be surprised at just how much technology you need to support a business that's such a high volume. Can you walk us through how Hubify Stripe Connector automates revenue recognition for e-commerce businesses?
Yeah, sure. Yeah, so Stripe is an interesting one because I think between Stripe and Shopify, those are two of the most e-commerce tools that we see out there. And Stripe in particular has a ton of different transaction types that can happen. Like you may manage individual subscriptions where you have recurring order revenue over time. You may just use it for billing and some of the more of the dunning and receivables portion with your order system may be a third party, or you can do the full end-to-end through Stripe where you have all of your orders and then invoices and the payment intents and charges. The way that we help folks is we say, well, RevRec is definitely a part of the problem, but we look at it like a revenue to cash problem, because everybody says they can do RevRec from a software perspective, but then if all you can do is RevRec where you're deferring the revenue and then showing kind of earned out revenue over time, some basic reports, that's still only probably about 20% of the problem, because if you can't substantiate how that revenue then ties back to cash and how the cash ties back to revenue, well, then you're still putting a disproportionate amount of the work on the accounting team to prove that out. That's not so easy with Stripe, who, you may have credit notes or customer balance transactions. And, I think we added it up and there were 28 different transaction types that can happen. Part of it is we treat Stripe like the source of truth for revenue to cash and including some of the fees and operational expenses as well. And so our connector goes and says, here's all the different record types that can happen. And we then codify that. We make sure the customer can, understand and codify their own policies, their own decisions. There's a little bit of an onboarding flow that you go through, which, is really where accounting team interacts and says, here's my accounting policies meeting my Stripe data. And then Hubify, we do a continuous close on that data to where, they are constantly closed, fully reconciled. Reconciliations are fully automated. You can look in Hubify, you can look in your Stripe dashboard. They shake hands and tie out and everybody's happy. So you've got a nice control there, but we support any number of ways that you can think about RevRec, and whether it's like cost revenue over time, or is it like customer balance transactions where you're deferring revenue and sitting in almost like a gift card balance. And then that puts folks in a position of, rather than managing the reconciliations and codifying and calculating the data on their own for accounting purposes, they're now reviewing the outputs of the data and actually getting a chance to use it, benefiting the business and digging in and finding value. So that's kind of at a high level how the connector works from both the technical side and then also how you get some outcomes on the accounting and finance teams.
Yeah, it's great. Sounds like you're doing it quickly as well. And coming from the audit side, seeing what clients do or used to do before technology came into play is, taking that Stripe report and taking those 28 different types of transactions and trying to manually pivot and create journal entries out of it. And we all know that could fail pretty quickly. So good to see that you're solving definitely a problem that a lot of our clients are facing. Jason, what other software integrations are key to support efficient, effective revenue reporting?
Yeah. So I think the payment processors are all key. So I think I listed a few earlier, but the PayPal's, the Braintrees, the Adyen's, even some of the newer ones like the Paddles of the world are, I think, all pretty key to be able to support, because if you're collecting cash from customers, there is both a revenue, an AR subledger, and a cash accounting surface area that someone's going to need to reconcile and do journal entries and really help to get the accounting outputs that the organization needs. So I think that's the bottom up approach. Otherwise, I definitely think anything in the marketplaces, whether it's, digital type of orders where it's on Apple or Google, where you're selling on the app stores, or if it's on like the Shopify ecosystem, those are all, I think, paramount to be able to get all of the order to cash and revenue recognition done for a customer. Last but not least, a lot of folks end up having like an internal order system or even internally built billing system. And those obviously have to be scoped in. So we have a number of connectors where, whether you have a Postgres database, Snowflake, Redshift, BigQuery, that data is getting stored somewhere. And it's like, here's the list of invoices, how that ties to contracts. That then helps answer some key questions, which is, where do I have revenue that I'm recognizing or should recognize, but I don't have any billings in place? And where do I have billings in place where I don't have any revenue, or maybe I collected cash and I don't know where to put it? That comes out on a number of exception reports. So by really tying those concepts together of how collected dollars apply to billings and then billings apply to contracts, that's kind of like the mental accounting model that every accountant has to do. And that's obviously therefore how Hubify has to automate it. We have to think the same way that an accountant would, just more as a tool so they can use and trust the data and the outputs. And then the recons are obviously the last but most important step, because it's, how do I know I can trust the data? And if you don't add that step in, you might as well have never started in the first place. From an accounting point of view, they would say, that's all well and good, but how do I know this is right? Which is a fair point. And frankly, I think that's the main objection with AI and a lot of these new technologies as well, is they're more probabilistic type of outcomes. And at the end of the day, how do you know it's correct? How do you hold a process that's driven by AI accountable? And the answer of most finance professionals is you can't.
Right, right. Jason, we talked to a lot of growth companies, e-com businesses looking to scale, and the market has been slower. A lot of these companies have plateaued in a way, or kind of shifted their mentality from growth at all costs to profitability, going lean and mean. Your platform is highly data driven, taking the data, automating processes, making things more efficient. Talk to me about how that supports growth for an e-commerce business.
Yeah, so I think the most common scenario that we run into is that finance or FP&A, accounting, and usually internal management / analytics teams all have a different source of truth for revenue and cash. And when that happens, that creates a challenge of managing that business in not a growth at all costs, but more of like a sustainable, how are different products and or customer segments contributing to the bottom line and allowing us to serve future customers, which is obviously why everybody's in business. And that's likely the most common symptom that we see, which is really just the analysis paralysis, where like it's not often where folks have not made any investments in data. It's that they've made investments in data, but they've been more BI investments. And it's really an overinvestment in the BI side and then an under in the accounting automation side. Well, how does that manifest with if you have operational outputs that you need to translate into financial performance, but you're using the operational outputs that don't tie to financial performance? That means that everybody's got a different answer to the same question, and it doesn't end well. So that's one thing that we really pride ourselves on, is because we're doing the daily close and we also have every single order level transaction in Hubify. That means a lot of the times we're automating that for accounting purposes, for compliance and the daily close and controls. There's also then the strategic finance and FP&A and a lot of times the accounting team becoming more strategic, which is now using that data to then find pockets of profitability or opportunities and to partner with management and the analytics team. We developed a product earlier this year we call the egress product, which basically says, hey, we'll take all of these like super fine grained transactions that we turn into financial records, which are the journal entries. We actually share that back with the data warehouse and the BI stack. So now everyone in the company, if you have a revenue dashboard, it's being sourced by the same underlying governed accounting source of truth, which is one of the most important things if you want to be data driven, is that you all get consistent with how you're defining these measures and that everybody's working off the same truth. From a revenue leakage perspective and like where do folks find value, I think the two most common ways we see it is revenue that was recognized and you delivered an order, but then you ultimately had a chargeback, or maybe there's an FX issue related to the payment, or really there's something where you didn't realize the value. You never got actually fully paid for the value. So that could be like bad debt, where, hey, you delivered something, but you never got paid. Like that's usually the first place that I'd look. The other one just becomes, I think, returns. So you have all this revenue that you recognize up front. We often help folks with the right of returns, and being able to segment that data is key, because not all products and not all return percent performances and predictions are the same. And more often than not, when you juxtapose all your different products and then how likely it is that they're returned are wildly different. And if you can get ahead of that and better predict that, well, now you can influence pricing strategies. You can also better book your estimated number of returns, which makes your accounting better. And now you're predicting and saying, hey, this product actually returns 5% more of the time than this, key product, which gets returned 1% of the time or less. Well, when you book the revenue, you discount the revenue at the time that you do that. So that way you're not taking the fallout the next month when all those returns hit your books and you're like, whoa, why did revenue from last month get such a hit? So again, there's both a compliance aspect and how do we know that we're collecting the dollars that we shipped and sent out? And then how do we know we're going to keep those dollars and they're not going to get returned, are really I think the two most important questions, and the two highest probabilities that you as a finance professional are going to find some dollars lying on the ground for your org.
Right. Yeah, certainly there's a high degree of importance on clean data, getting that data efficiently to management. I want to talk about AI for a little bit. AI is just reshaping e-commerce from chat-based shopping to predictive analytics. How is Hubify leveraging AI to either support the platform or the back-end technology, or just support e-com in general?
I think AI gets a disproportionate amount of the sexy marketing chats that happen, and like it's definitely something that everyone wants addressed. But now if you fast forward, I think particularly for finance and accounting, there's really automation, like deterministic automation. And then there's AI, which is more probabilistic. I'm going to get this, close, but it's more of an estimate within a range. And it's more of prediction of what can happen versus this is the true, actual, correct accounting. We disproportionately fall more into the automation and deterministic side of the house in terms of solutions, because we believe that's fundamentally what accounting and the accountability that accountants are held to need when it comes to the next gen automation tools. Because the minute you have an AI hallucinate and give you some random total that was off because of some outlier that got trained in your model, which happens quite often on these new platforms, that's the end of them ever trusting that AI, and the value is then diminished completely because they're going to spend more time with the controls around the box than they get out of the box. That said, I think there is a ton of incredibly valuable use cases. We're launching a new product later this year, which is really twofold. One, it allows folks to query or ask kind of about a customer or a scenario, and then we'll help to codify that scenario and say, hey, here's a lot about this customer, the subscription, and how much they owe. Rather than jumping around to 2 or 3 systems, I think having all that data in one place and then using a chatbot and AI or even agents at some point to then go and say, hey, here's what I should be looking at and give me all the context that the human being in the loop needs. I think there's a bunch of great use cases there. I also think dunning is a key one, which is, going out and figuring out exactly where, from a collections perspective, you should be spending your time, and then ultimately automating those first and second degree reach outs where there are dollars that are owed for revenue that's already recognized. Like that is I think a very key use case that I'm seeing people invest in, which is absolutely where they should, because it makes it easier on the end customer. It also makes it easier on the organization itself to highlight exactly what needs action taken. And if there is action taken, then go ahead and have the agent take the action. So I think those are 2 key use cases for AI that are pretty legitimate.
Right. Yeah, we certainly see it with a lot of our clients, just chatbots and agents for customer service. I think as just consumers, you see that pretty often. Does Hubify support e-com companies tracking revenue from some of the emerging channels like TikTok shops or Instagram shops?
Yeah, we pride ourselves on, new integration opportunity comes up, and we think that is a repeatable opportunity. We invest in that. We've done 4 new integrations in the last 2 months. We most recently started working with some Roku data where like Roku and a lot of these folks that are generating content, a lot of times they're monetizing, through Roku and some of this like media content. Now, I think for e-coms, like, the direct buy through TikTok, I think is usually potentially a smaller proportion. And then TikTok may influence them to buy, and then they're buying more on one of the primary channels. And so a lot of times that becomes more of like a marketing attribution problem that they want to see solved, that like which orders came from TikTok, no matter what channel they checked out on. That's a common conversation that we have.
Right. Right. I want to switch gears a little bit, just to talk about tariffs a little bit and trade disruption. It's been a hot topic of late, and with tariffs sort of back in the spotlight, how are some of your clients, how are e-commerce companies adapting their supply chains, pricing strategies?
Yeah, that's a great question. As I chew on this out loud, I think there is a lot of analysis paralysis and just paralysis in general from like there's so much uncertainty in 2025. It's hard to figure out what to do. And a lot of folks are, almost unsure to do anything other than get more conservative. That said, I think to distill like the folks that are taking action is the realization that historical data is no longer predictive of future results. And for a long time, but let's call it pre-COVID, in fairness to everybody, then you could look historically and you could trend last year, you could launch a coupon code, and there was a degree of predictiveness to that action to say, hey, this is what I can come to expect from taking this action from a price and a discounting or a marketing perspective. I don't think that folks think that's true anymore, and I think they're correct. That predictive power, in a lot of ways, the predictive power of AI in many ways is actually greatly reduced, because at the end of the day, when you're running through models through your own head, your internal models, or through AI, if what's happening now, you can't really use history to predict it, well, that puts you in a very different spot. And most people are going back to foundational things. We need to operate the business on, typically folks say day to day. I don't think that's realistic. I think it's week to week is the cadence and the drumbeat that I've seen people do successfully, particularly in e-commerce with pricing. And week to week, they're looking and saying, okay, I've got a scorecard of what happened last week. How did we do in line with our expectations? And then how are we going to change our hypothesis and what we're going to do this week? So those operators, they're definitely not waiting on the month end close to be able to make decisions in their business. And they're also not using forecasted models from like prior month close or even prior like order level or analytics to try to predict what's going to happen. They're very much going, okay, all we can really do is measure and cut more often, because you did the waiting thing and you got burned. You lost, 7 figures from not acting sooner. That's where if you're still looking at a month end close at a 10-day close, you're looking 45 days in the mirror. That is absolutely a great way to leave dollars on the floor because of tariffs and so much variability. Also the demand side, because consumers, as e-commerce folks know, consumer spend and the predictive nature of the fickle consumer right now is really challenging. So those are arguments of, I can't really predict what's going to happen using old data. I can't look 40 days in arrear to run my business. So I'm going to go old school operator weekly, flash reports. And that's the best way to run the business right now, to ensure that you're not analyzing yourself to death, but you're also not leaving dollars on the table from either using not predictive data to make decisions are going to be incongruent, or waiting 40 days to then figure out that you lost a lot last month.
Right. Yeah. At the very least, it's just been so uncertain. I think, with all this tariff uncertainty, it's allowed businesses to just take a look at their financials, take a look at their COGS, landed costs for their products, and take a deep dive on it. Even going SKU by SKU, just understanding, where the value could be, and adjusting strategies from there.
Exactly. And to do something like that, consumer demand has to be somewhat predictable, and it isn't right now.
It's not.
So they're not going to make those moves, and I don't blame them.
Right. Makes sense. So what's next? What's next for Hubify? Any exciting partnerships or any new features on the horizon that we should know about?
Yeah, we talked a little bit about the LLMs and some of the chatbots to allow you to get answers to your data more quickly from these third-party systems. I think that's key. But for us, we've invested a lot this year with ERP and general ledger integrations. So ultimately, what we want to be able to do is be the tool that accounting and finance teams can trust to connect to their operational systems. And then we want to be that full, almost ETL for accounting flowing into the ERP or the general ledger. So we launched Sage, QuickBooks, and NetSuite integrations this year. And those have been pretty key, because now you have full end-to-end automation where you can connect to the operational store of data and then say, okay, great, Hubify, calculate all these journal entries in the subledger. There's now composite journal entries because you don't want to push all that level of detail on the ERP because that kind of defeats the purpose and the reconciliations are hell. And then we surface these control reports, reconciliations, and alerts in the platform where if you have some of these things that are either material or immaterial, you know about them as you're closing your books. That then enables like that day zero close and then a daily close throughout the middle of the month to see metrics that you know you can trust. So I think that was the most impactful feature that we're officially launching. I'm giving you the preview. But I think that's definitely the next gen, like full end-to-end automation that folks on the accounting team are looking for, because now you're also able to rely on solving the controls aspect where, you know, the data in your ledger, your subledger can now substantiate back to these third parties and your controls can be very easily automated at that point.
Right. Right. Yeah, that's amazing to hear, and sounds like if you're doing daily reconciliations using the software, using the Hubify platform, it's going to be a lot easier for you to make those weekly decisions, management decisions. Any last thoughts? Any last thoughts before we end? Anything for the listener?
I'd love to redirect to you, Lonnie. What's the prediction for the remainder of 2025 look like for the ecom folks?
Yeah, it's been slow out of the gate. I think just consumer spend is kind of flat with the just unpredictable nature of tariffs, and it's kind of anyone's guess. But I would say there's certainly upside. I think most of our clients are going lean and mean. Growth at all costs is no longer the main conversation. It's kind of trimming down. Investing in automation, there's a cost that comes with that. So evaluating every decision, carefully. I think 2025 might be a flat year, but if we look at 26, I think with the investment in the AI, automation, software, streamlining processes, and then adjusting price strategy to kind of meet that consumer demand, you'll see some winners. We'll see what happens after we kind of get through Black Friday, get through the end of the year. We'll see.
I like it. It's the
But
tee up for a great 26 is what we're hoping the
exactly,
end of 25 is.
we'll go with that. Hopefully more happens, and we'll see what happens after year end. But Jason, where can we find you? Where can we get in touch? LinkedIn or anything? Do you want to plug anything before we end?
Yeah, website's a great option. Hubify.com, HUBIFI.com, and absolutely LinkedIn. Like most folks on our team are not true sales marketing folks. We're CPAs, former accountants. And so we love to chat with folks. And if we can't help, we can often direct folks to the right spots. We'd be happy to help you however.
Awesome. Yeah, and if anyone wants to know about Withum's e-commerce practice, feel free to reach out, LinkedIn or email. We'll get in touch. Appreciate everyone listening, and until next time. Thanks, Jason.
Thanks a lot.